Good morning, ladies and gentlemen. Wow, it's been a wild week since I've done a show, and here we are again on Wednesday, August 28th, and been a really sort of choppy market, and we'll take a look at that. We'll take a look at some of the open trades, maybe a couple pending trades. I'm going to do a quick show today because I have some errands to run. We are headed into a holiday weekend. This upcoming Monday is Labor Day, so I expect things to perhaps slow down and get a little bit dull over the next couple of days, but you never know. This is such a news driven market now. It's been really wild for, let's see, when did this all start? Here we go. Let's go back to reviewing the chart here of the S&P just so we can see kind of where we are. So this all basically kicked off. There's the all-time high, right? And it's always fun to look back and marvel at how the all-time high literally got stopped right at that overhead resistance line, which is sort of uncanny. What's uncanny about it is, that it didn't like not quite make it up there. It didn't quite poke over it. It didn't flutter around it. The way I have it drawn here is when I zoom out on my big screen here, it's drawn pretty much right at the highs, and lo and behold, when you zoom into the chart, I mean it literally got stopped cold right there at the all-time high, right? And then of course the infamous Fed day, which in the past I've pointed out that these Fed days tend to in the past Fed days have tended to be sort of reversal type days, right? Back last fall when the Fed raised rates for the ninth time, boy, that kicked off a massive sell-off in the market. That was the beginning of it anyway. Shortly thereafter. So anyway, Fed day, and then the following day, everything was sort of looking up in the morning, and then Trump escalated the trade war, and then so we've dropped into this humongous trading range here, which I took the liberty of drawing. I did a calculation. I took the high from this day, right? Friday 8-2, and the low of this day, Monday 8-5, because those days really encompass like the high and the low of this subsequent trading range, right? You can see the open and the high that day was just slightly higher than these highs, and this low back here was just slightly lower than these couple of lows. And so what I did was I just found the midpoint between that and put a line there, and I believe it's like right at 28.84, call it. So that gives a little additional perspective to this trading range that we're in, which is about roughly 120 points as I recall, something around there. And so there we are, right? And the interesting thing is that every time it gets up to the top of this range, it seems like and this is a year to date chart, or I'm sorry, not a year to date chart. This chart, like zoomed in like this, just goes back to the beginning of June when this latest rally started. But if I zoom all the way out to the beginning of the year, let me do that real quick. So it's all about time frame and sort of perspective here, right? So here's the beginning of the year. Here's a year to date chart. And so, we had this massive rally after the 20% sell off, and then a little dip here to, 27, 22. No big deal at all. So nobody was even concerned at 27, 22 back here. And then, of course, rallied back up. Here was another Fed day that kicked off a little, about a 7% correction. And that was the month of May was pretty rough, and it was definitely sort of an orderly correction, but nobody was panicking here, right? It was just a typical sort of run of the mill correction, but there you go. It wasn't even a correction; it was just more of a pullback, right? Seven point something percent. right to, just about the same level there. 27.28 was the low this day, right? And then, of course, that turned out to be another pivot low right in that same vicinity, and then launched off of it and hit the all-time high. And so, the only thing that I can figure, well, I'm pretty certain about this, is how fast it fell here. That's the reason everybody's freaking out. I mean, you look at the bigger picture here, we're still well above these two lows that we've seen year to date. And I don't remember the level of drama, being anywhere near what it is now. And so, these first few days here after the Fed meeting and that sell off there, and of course, CNBC did a markets in turmoil special. And so that's really what's, I think, caused the level of drama is how quickly it fell. But I mean, even if it were to break down out of the bottom of this and come down and test that, I mean, that's still like, levels that nobody was really worried about back over here. So, anyhow, when you zoom into this sort of chop kind of makes it tough. And the other thing is, the market obviously, the market tends to do better when you get these sell-offs. When you get these sell-off days and these moves from the top to the bottom of the range, individual stocks tend to get crushed. Um, if you take a look around the sectors, I mean, many sectors, or I should probably say most sectors, aren't doing nearly as well as the overall market. And of course, the S&P is doing much better than like the Russell 2000 and that. So it's a pretty rough market. Don't get me wrong, it's a rough market, right? You're seeing lots of stocks getting hammered, and I mean, you got like energy and financials looking horrible. Individual stocks are nowhere. The S&P is like 6% off the high right now or something. There's a lot of individual stocks that are down considerably. So, but it is what it is, and so now we're yesterday things were kind of looking up at the open, and then of course we got a pretty big fade all day. Today we have a little bit of a gap down, and then of course the market sort of turned around and is basically headed higher. But so I'm just kind of watching this big giant range here, and I think that I think that it was this day here on 8/23 that Trump threw out a couple of sort of crazy treat tweets, right? He talked about that was the day that he really sort of escalated things. He got mad at China and mad at the Fed and all that kind of stuff. And boy, that was one heck of a long range day, right? I mean, it was actually like the one longest range day since this whole sort of sell off began, and it encompassed basically the majority of the range in one day. What's interesting about this is that these couple of days here, you went from the bottom of the range to the top of the range in 2 days, right? And then, right here, you went from the top of the range on 8/13, top of the range to the bottom of the range in 2 3 days, and then this rally right here. And so, what's crazy about this is that it's such over 100 S&P points, even up at these levels, is still a pretty big range. This is like 120 points, and so these up and down movements, I think, are just sort of driving everybody crazy. It's going to be really interesting to see which way this ends up resolving, and it might not resolve for a while. It'd be interesting. It's going to be interesting to see where it closes on Friday ahead of a holiday weekend. Whether it's like in the upper section of it, the lower section, or whether it's like right smack in the middle. So it's anybody's guess. Right now, we got an extremely news driven market. You got obviously the trade war with China is a pretty big deal because those are market moving headlines. I just saw this morning that they're going ahead with additional tariffs on September 1st, which is basically this holiday weekend, right? So going into September, we're going to have the additional tariffs that could potentially spook the market. it's pretty clear that there's like a, sort of a global economic slowdown out there, and I think that sort of doesn't bode well. You got the inverted yield curve, which everybody's talking about. You got China devaluing their currency. I mean, quite frankly, all the different things out there, and then throw in the Fed, because the Fed, there's been a lot of weirdness out of the Fed, and Trump literally criticizing the Fed on a daily basis on Twitter, and the Fed sort of, when the Fed minutes came out, I guess it was like last Wednesday or whatever, when the Beige Book came out, they basically said that they they weren't necessarily planning on a cycle of rate cuts. And yeah, I'm sure you've seen the news about Bullard's op-ed and all that. So I mean, there's a lot of moving parts to where we are in this market, and quite frankly, I think that things holding up pretty well considering all those sort of negative news items floating around out there. So um, that doesn't mean that it's not time to be cautious, though. I'm thinking, here's the thing: is like this lower end of the range is a pretty important spot, right? You break down out of there, it's a pretty quick, probably be a pretty quick trip down to this support level. Even still, though, I mean, we're still fluttering around up here, so market needs some good news, and of course, that can come too, right? So there's just a lot of things in flux, and inside of this trading range here, I don't think anybody has any idea, what to expect next. So the funny thing is that when the market rallies up to the top of the range, and so this started. Let's see, that's on basically on August 1st, right? So May, the entire month of May was a big down move, big pullback for the entire month, and then on June 1st, boom, it turned around. And so, here's August 1st. And so basically what we're looking at is this sell off started at the beginning of August, and all this crazy choppiness is going to essentially encompass the entire month of August. And then we'll see what happens come September, right? So don't forget the market's closed on Monday for Labor Day. Everybody looks forward to that. I look forward to that. So been a long hot summer here, although not as bad as last year. So anyway, there you go. Big giant trading range. Nobody knows which way she goes. Um, if for some reason it does, if something happens and they break it below this, then look out. The market's still up significantly year to date. So, but hey, if there was ever a time to be cautious, it seems like the majority of the professionals are leaning sort of cautious. Here's the thing: a lot of the year-end targets are right around 3,000 or above, and there's still a lot of time to go. I mean, the thing of it is, everybody seems to focus. I wanted to zoom out here to. Well, there we go. Let me try it this way. Everybody tends to focus on like the news right now. You know, there's the end of the year right there, and so anything can. I mean, we could have a big down move and then rally back up at the end of the year. We could rally up and sell off at the end of the year, right? So remember last year. Last year was crazy because everything was sort of going along fine, and then in October, October's when the sell-off started. And this little area here, this area right here, mid-October to early December, kind of reminds me a little bit of the environment we're in now, where you had like these big sell-offs and then a huge rally and another sell-off and another rally, and you couldn't really like nobody knew which way this sucker was going to resolve, right? And so this basically was a big sort of up and down trading range resolved to the downside, right? So you got something similar. I could draw a similar square around here, and so it's going to end up resolving to the upside or downside depending on what happens, I suppose. So anyway, it is what it is, and so the overall market obviously is a function of how the trades are going to do. So the nice thing is that the system is not really so much focused on the market. It's focused more on individual. Well, it's focused completely on individual trades, and so we will see how things play out here. Um, Real quick, I wanted to mention it's not really earnings season, but we have Dollar General, which has been an open trade for a while, is getting closed today ahead of earnings, and I did mention that I think last week, so I drew this here. Amazingly enough, the retailers have been pretty weak, right? Retailers have been extremely weak, but you can see that Dollar General's been in a pretty nice uptrend, right? I mean, it started, I guess, in 2018. Yeah, there's the big end of year sell off, big pullback, but been a strong stock, and so the funny thing is that never quite made it up to the target, right? So the typically this is kind of sorry about that chart, but I wanted to point something out here. Typically, this pullback and this sort of consolidation, if this had gone on a couple of more days, this trigger price here, like this actual trigger, 136.10, would likely have come down a little bit. So what happens is the trigger starts off like really wide and then it tightens up. Kind of like the stops, right? The stops start off kind of wide and then they tighten up real quick. The same with when a stock hits the pending trades, the trigger tends to be like extremely wide, and then with each day that passes or each couple of days, the trigger comes down, comes down, comes down, tightens, and so this trigger would have probably tightened down into the 135s, except for this stock just happened to have this big gap up and big move that particular day, right? And so it's just kind of interesting because it's just one. We see all sorts of different variations of how stocks, how the trades work out. But anyway, so this one's going to get closed today using today's open price because that's how we do it. They release earnings tomorrow at the open, and so as I mentioned before, the way that we do it is that if a stock is going to release earnings like today after the bell, we would close it based on today's open. If a stock's going to release earnings tomorrow before the bell, then we use today's open too. So that's a little bit of a winner there, a little decent one. Hey, anything can happen on earnings, right? It's actually a pretty constructive chart. It's a very constructive chart. And so when they release earnings, yeah, could probably probably looking at a big pop up here. But then again, you never know. So we don't recommend holding over earnings, although it doesn't look too bad. Quite frankly, if this was well, I don't even want to say it because, like I said, we don't. There's no edge to holding over earnings. So I thought maybe we'd look at some of the other open trades that we have here real quick, and oh, there we go. Here's the open trades. Thought we'd take a look at some of these, and so Dollar General's going to be gone, right? Interestingly enough, cost. There's another retailer on here. The funny thing is that the retailers have just been sector as a whole has really been hurting. But there's a handful of retailers that have been doing good. Target, Walmart, Costco, Dollar General, and then all the other retailers have just been I mean terrible. So look at XRT here. XRT is I think we looked at this last week. It's a disaster, right? It's back down around the December lows, basically undercut them here, and so there's nothing looking good about retailers as a whole. But there's isolated pockets of strength. You know what I forgot to put on here was the target, 287. So that target's let's see. There we go. I'll just sort of eyeball it here. 287. So blasted through that yesterday. I guess you saw the news, or maybe you didn't, about Costco opened a store in China, and it was thousands of people showed up, and they basically had to close it early. And I mean, people just went nuts over it. So it's kind of interesting with all the rhetoric and the trade war with China and all that. That Costco just opened their first store, and it was a huge hit. So there you go. And remember what I said about adjusting the target based on your entry there, right? So this is one that, I mean, this day where it closed, actually closed over the target, right? So the next morning it opened just slightly above the target, sort of popped up, but um, if you don't remember me saying that, basically, so say the trigger was 277.50, and you got that close above the trigger. Next morning, you decide, jump in. We always talk about not sweating the nickels, dimes, and quarters. So, say you got in at 278, right? Then basically, you want to stick with the stops, right? And that stop got moved up quick. I mean, the initial stop was right here, and then literally, 2 days later, boom, that stop moved up a little bit. But if you got in, say 278, 50 cents over that, you just basically would adjust your personal target up 50 cents, right? You adjust the target up. And so that way you can still, with the ones that hit the target, you can still get basically the same amount. And so there you go. So Costco's actually going to probably end up being one of the after today's move. So it looks extremely dramatic, but this is typically not really a high beta stock, right? Typically, but it looks so dramatic because you got a couple of long range days there. So anyway, I would expect the T stop to pop up fairly quickly, and we might even see a parabolic stop kick in on this. Based on this being the second day, I would say that a parabolic stop or would kick in like sort of under today's low. That's where you'd want to protect this, obviously. If for some reason you weren't selling at the target, you want to protect that. So, all right, let's get on the list real quick and take a look at these. GDX. Here's one of those cases where here's what I've noticed lately is that stock triggers in the initial stop seems like super wide, right? This one was like down at the bottom of the pattern here, and then literally the very next day, the trailing stop comes up, moves up like the next day, right? Tightens up. So it's one thing to keep in mind if we're not really, you see so many. Well, it's a standard sort of idea in the business that you want to be taking 2 to 1, 3 to 1 risk reward ratios. But the way that our system sort of handles that is that the initial stop very seldom gets hit, but it happens. It happens in tough markets. The initial stop, the stock triggers in, turns right back around, hits the initial stop before there was ever a chance to have it trail up. But all it takes is a little bit of movement past the trigger, and that stop will ratchet up. So GDX looking pretty good here. Again, if for some reason you can see how it closed significantly above, I wouldn't say significantly, but see the trigger was 29 and the close was 29.64. The open this day was 29.68. So you're talking 68 cents, right? So basically if you jumped in that area, you just add that to the target, and so the target's going to be up here a little bit. not quite hit yet. No big deal. So, and based on this price action, I expect that this trailing stop will be up in the area of the trigger anytime now. Nice uptrend on this. Speaking of gold, let's just take a look at gold here. I want to show you something here. Look at this. Look at this monthly chart of gold. Right. I have my monthly chart on a log scale. This is a 5 year consolidation that it's breaking out of. Look at the weekly chart here. Whoops. For some reason I set my weekly chart on. I want to put this on candles. There we go. Yeah, weekly chart doesn't really show you, doesn't really show the up move, but it does. You can see this big, humongous base here, but the monthly chart really stands out, right? And so that's a pretty big breakout there. And of course, now that everybody's talking about gold and noticing it, who knows, could pull back for a few months or whatever, but that's a pretty constructive pattern there. So, and of course, GDX is the gold mining shares, which a lot of them have been doing really good here. So far so good. It could definitely consolidate a little bit, but with everything going on out there in the world, and the negative interest rates are what makes gold appealing globally, amongst other things, right? So not a bad. And this is I mean, this just triggered in a couple of days ago, right? So moving down, moving down the list here, you got Intuit. This was kind of a weird one. The trigger was sitting there, right? The trigger was sitting there, and it looked pretty good, right? But we didn't get a close above this trigger until this day right here, which I'm pretty sure was earnings, right? I may be mistaken, but I'm like almost positive that that was an earnings pop, and so that was kind of an unusual one. Occasionally during earnings season, you'll see a stock trigger in because it popped on earnings, but this was just a really weird one. So it is what it is, and I'm not real sure that I like the way that triggered in. So I would have probably. And here's the thing: is there's a lot of stocks that cycle through the system, and so you can choose to just avoid these anomalies and pick something that looks better. This is one I would have just passed right over, just because of the way that one looked. It's kind of another weird one. Match.com. There was a trade on it here, big earnings pop, and it looked pretty good. Sometimes you get like that big pop, the fade, perfect pivot low, and you get like sort of just a V type reversal. But this has just been floundering around the trigger price here, right? So there was your first close over it on 822. So it is what it is. I mean, stop moved up pretty quick here, and today this thing could go green, right? So it's still looking pretty good, but that's pretty tight stop for an expensive stock like this. And then of course Costco going down the list here. TPX. Now this is one that the stop actually did trail up, but this one's kind of nasty because it triggered in and then basically took another leg down along with the market. So these are the ones that we had a really good trade in this particular one back over here. Um, this is a little bit of a fake out here, right? So trend line. You had the dip, another dip, trend line break, and then right after that, looking for a continuation of the rally, but still sort of in. And of course, this morning it got knocked out. So it'll be interesting to see if like today's low here to look at this in the next few days to see if it just comes right back up. Interestingly enough, this is one of the pitfalls of trailing these stops up so quickly, though, right? Um, it's a double-edged sword, right? Like the initial, like we could turn around, 2 weeks from now, and that initial stop never got taken out, and the stock takes off. So, but the system based on this, trailed the stop up pretty quick. So that one's going to be closed today. CDW, same sort of thing. Same sort of thing. Now, here's the thing is bigger scheme of things, this is a pretty strong uptrending stock, but the sort of the day-to-day volatility of this, it came kind of close to this stop. So you'll see a lot of them that when they do have these pullbacks, they come right down really close to the vicinity of the trailed up stop. And then, today could very well, if we see additional strength in the overall market, which we're actually getting, a bit of a move up from today's open, but you can see this thing turn right back around, and this little low today could turn out to be, a pivot low. So we'll just have to see here. Tyson hanging on pretty good here. You can see how quickly these stops came up, right? I mean, here was the trigger, and so like very next day, stop came up from around these lows to around this low, and then last night, this is the current or trailing stop right here. So you can see, and from 89, 87.70 to 89, this thing's coming up quick, and so that's sort of the idea there. Let's see, what is the target on Tyson? The target is 93.25. Sometimes when the target's like actually sort of off the top of the chart, I don't put them on here. So what I usually wait until a stock starts to approach the target before I'll mark it, but might as well put it on here. So there you go. And here's the other thing is that back over here we had a fairly decent trade in this, but look at that uptrend. That's a beauty of an uptrend right there. And so sometimes you get these rallies that they keep going, right? Like this one back here, it just kept going without hardly any pullbacks, and then sometimes you get the dips. So no big deal. I have noticed. Let's see, at Target, what did I say it was 93.25. I've noticed there's a lot of these stocks are expensive stocks. We haven't seen any low price stocks trigger recently, so that's kind of weird, but it's probably where we are in the cycle. JEC. JEC. It looks volatile when you zoom in, but not so volatile for an expensive stop. We've had three trailing stop moves, right? So the trick, is to not sort of get shaken out or not get knocked out by the normal volatility, especially initially. But as that stop trails up and gets closer to the price, then you'd never know. So this is a little bit sort of choppy in the near term here, but still overall a pretty good looking stock, right? So if we get some strength into the end of the week, today could actually turn out to be a low on a lot of these things. So a lot's probably going to depend on the market, but this sort of setup right here, that stop placement looks pretty good. And basically it wouldn't take much for this to rally back up to the highs there. So EDU looking pretty good. This is exactly what you want to see here. This is kind of what it looks like when it works out. So, and the funny thing is this stock is EDU has been very kind to us in the past, right? Trade over here where it you can hardly see that one, but there was one back here in June where it trigger rallied up to the target, had a big gap over the target, right? And then literally it got closed on this pullback, even though even though that was just slightly higher than the target. But anyway, so it triggered again, like, literally like the next week. And it was kind of a funky one because it triggered ahead of earnings, but still made a pretty decent move. And so you can see this stock is, this thing's up at the highs right now, right? Up at the highs and looking pretty good. Not looking too bad here. And so again, this stop will just kind of keep creeping up here, and then hopefully now that this thing's starting to break out into blue sky, get a kind of a another leg up on this, right? So looking pretty good. EDU's actually this is one of the better looking ones, and this thing, let's see, when did this trigger here? On 8/21, so this day. So basically, your your triggers like, or your entry is going to be like right around that vicinity there. Looking pretty good. Moving down the list, Twitter. Let's see what Twitter looks like. There we go. Let me. Sometimes like these drawings on here are a little tricky. They're very tricky. Trust me, I do it a lot. And yeah, this is a crazy one because actually this trailing stop just got moved up like over here, I should say. So I kind of had that positioned a little bit wrong, but so there was a trigger at 42. Um, it's almost it's pulled back a little bit, but didn't quite tap that trailing stop. Now it's come up, just a little bit, but Twitter's got a pretty good look to it. That's a pretty decent looking pretty decent looking pattern there, right? And so a little strength in the market. The market's been really rough, and so if for some reason we see a little bit of strength, then some of these are going to look a lot better at the end of the week than they did yesterday or the past couple of days. So this one this one was just sort of nasty because it was on the way up and then just reversed, and so this will have hit the stop today. It looks like. And last but not least is Dollar General, which is in our system. It's getting closed at today's opening price, but quite frankly, if someone was actually in this and following it closely and knew that earnings are coming out tomorrow morning, you got all day today to decide when and where to get out. So it would be interesting if this thing actually hit the target. It would be interesting if this actually hit the target like intraday today ahead of earnings. And so anyway, sometimes even after these get closed, I like to I like to go back and sort of see what the subsequent price action was, see what happened to them, and it's always fun to kind of follow along. So especially on the earnings, like when earnings are coming out on the stock, I like to go back and sort of follow the reaction, right? So anyway, I don't. You can go through the pending trades. I see Apple's a pending trade again. Apple was, Jeffrey mentioned something about Apple. Um, Jeffrey mentioned something about Apple that that day when I guess this was the big long range day down when Trump sort of escalated the trade war, and very frustrating because and I know that hurt a lot of people as far as people sitting on stocks or whatever, because the thing of it is everything was going along very swimmingly, everything was working out, and then all of a sudden and this stop was basically had ratcheted up the break even. We were like we were one little pop away from hitting this target on Apple, and then there you go. Trump tweet. As I recall, it was the day. Yeah, it was. It was this past Friday, right? So Jay Powell was giving a speech in Jay Powell was giving his Friday morning speech, and the market had pulled back a little bit in the morning, and then he gave his speech, and the market started rallying. It kind of, it had sort of a positive initial reaction to his speech, and then all of a sudden, out of the blue, I don't know what Trump was expecting, to Powell to come out and do an emergency rate cut, but it's literally, right after Powell's speech ended, Trump came out with that tweet that said something to the effect of who's the bigger enemy, you know, uh, Z or Powell or whatever. I mean, and then he also slapped. He also announced he was adding additional tariffs to China, and man, the market just had one of the biggest down days in a while, the longest range down day, and so you see a lot of stocks with big long range days down on that. And there's two ways of looking at it too, right? Is quite frankly, the market itself could have tanked after that, right? I think a lot of people thought a lot of people the conventional wisdom, like after the close on Friday, there was even more escalation, and so the conventional wisdom was that that Monday the bottom was going to drop out of this thing and it was going to break down through here, and then of course there was a little bit of cooler heads prevailing, I guess, on Monday. Thank goodness. So anyway, but yeah, that particular day right there was kind of it was almost, well, I won't say it was worse than these 2 days combined, but you had the big gap down this day. So China devalued their currency here. There's so many pieces to the puzzle and moving parts about the current narrative in the market, right? You've got inverted yield curve. You've got an inverted yield curve here in the U.S. You got all these, $15 trillion of negative yielding bonds around the globe. You've got recession fears. You've got the ongoing trade war, which is like 418 days old, dragging on, and not really any progress being made. You've got Trump bashing the Fed, all sorts of crazy stuff going on out there. And quite frankly, I'd say the market's hanging on pretty well, you know, with all that craziness sort of lingering out there. So we'll just have to see what happens. And so, anyways, the system's gonna do what the system does, and it goes through periods. It goes through periods like when we get this kind of price action, where you get like a string of stop outs, and then it's kind of like and I'll finish with this. You've heard the old saying, cut your losers quickly and let your winners run. Well, that's basically what it's designed to do. So it's the winners stay open. They tend to run and stay in there and keep going. And then on the losers, they'll hit that stop and get closed pretty quickly. And so that's sort of built into the system. And so that's why you just kind of stick with it even through the periods of the small stop outs. So the worst thing is when you take a full stop, like when the and there's only a couple of those, but they happen during these rough periods where you take a full stop out. But typically, you just keep at it, because look at the market today. We're getting all of a sudden we're rallying up. So nobody really knows what's going to happen, and so down at the lower end of this range, everybody gets bearish, and then at the upper end, everybody gets bullish, and then the market seems to like drive in the opposite direction. So that's why I drew this midline here. It's like sort of another reference point, and so yeah, it's going to be interesting to see what happens here. Interesting to see what happens. Keep in mind that September is seasonally the weakest month of the year. And by that I mean the S&P is usually down, 1%, so no big deal. So we'll see how all this plays out. Anyway, I'm going to wrap this up. I got some errands to run, so thanks for tuning in, and we'll see you here next week.